So, what's the future of banking? Is decentralized banking better than the current financial system? What problems does it solve? And does it have a chance to improve or completely replace traditional finance? You'll find answers to these questions in this video. But before we get into the video, don't forget to leave a like and subscribe to the channel with notifications on so you don't miss any of the new videos we post. First off, the financial system that we know today went through decades of technological advances. The earliest attempts to make finance more efficient started as early as the 1920s, with the introduction of accounting machines and punch cards. This was followed by the rise of the mainframe computers that significantly sped up the banking system in the 1950s and beyond. The next revolution was the invention of ATMs and credit cards that started being popular in the 1970s. Also in the 1970s, another important element of the financial system, the stock market, started going through a radical transformation. Manual order entries and loud trading pits started becoming slowly replaced by computers and algorithms. From the 1990s, thanks to the growing adaptation of the internet, the computerization of finance got supercharged, accessing bank accounts, making wire transfers, buying stocks, and all of these operations possible from the comfort of our own houses. Then came the fintech revolution. PayPal, Robinhood, TransferWise, Revolt, and other fintech startups understood the take-first approach known from other non-financial tech companies and offered their users seamless access to financial services. A completely different experience when compared to the clunky banking user interfaces. Despite a century of innovations, the financial system is far from being perfect. Settlement of stocks, bonds, and other financial instruments takes days to clear and requires a massive amount of human capital involved in the process. However, the industry is being controlled by the 1% of 1%. Key decisions impacting millions, if not billions of people are made behind closed doors by a group of privileged few. Issues include billion-dollar banking scandals, massive inefficiencies, and high costs when it comes to international banking and remittance services, and equal access to financial services with billions of unbanked people across the globe. Then there are banks hiring thousands of employees just to keep maintaining inefficient processes and being compliant with ever-changing banking regulations. There's a super high barrier to entry for the new players, making it almost impossible to start a new financial company without access to a massive amount of capital, stifling innovation. The whole financial infrastructure consists of siloed systems built with proprietary technologies and algorithms that each company has to make from scratch. The beautiful user interfaces provided by fintech companies only cover the fact that the financial system is built on old and inefficient foundations. Something that seems to be instant for the user can take days to fully process behind the scene. On top of that, the backbone of the financial system hasn't evolved much since the mainframe computers were introduced. This is exactly why we need something new, something better that can address some of these problems. And this is where decentralized banking comes into play. Decentralized banking is the future. Instead of relying on old and inefficient infrastructure, decentralized banking leverages the power of cryptography, decentralization, and blockchain to build a new financial system. A system that can provide access to well-known financial services such as payments, lending, borrowing, and trading in a more efficient, fair, and open way. Efficient, as all operations are settled almost immediately. It doesn't matter that counterparties may be in completely different geographic locations, with inconsistent laws and regulations. On top of this, most DEFI protocols can operate with no or minimal human involvement. This could be the answer to censorship-resistant services. Fair, as all services are completely permissionless and censorship-resistant. Permissionless, as everyone with a browser and an internet connection can access them. There is no document verification, no need to provide income statements. Nationality or race doesn't matter. Everyone is treated in the exact same way. Censorship-resistant, as no other parties can deny us access to these services. Even multiple bad apples cannot change the rules of a sufficiently decentralized system. In contrast to traditional finance, new applications can leverage the existing protocols and build on top of existing solutions. On top of that, everything is transparent and visible on the blockchain. Trading volume, number of outstanding loans, total debt. All of these can be reliably checked on the blockchain. Even better, these numbers cannot be tampered with. All of this is possible thanks to the invention of Bitcoin and Ethereum and their underlying technologies. In particular, Ethereum is a smart contract platform. It allows for creating any arbitrary financial applications. Because of these characteristics, Ethereum became a go-to blockchain for the vast majority of DeFi activities. Decentralized finance has recently been experiencing tremendous growth. Some of the key metrics are total value locked in DeFi, which represents the value of all tokens locked in various DeFi protocols, such as lending platforms, decentralized exchanges, or derivatives protocols. This number has grown from less than $1 billion in April 2020 to over $32 billion in February 2021. Another important metric is the trading volume across decentralized exchanges. This figure has grown from around $500 million in April 2020 to over $50 billion in January 2021, a 100 times increase. Total value settled on Ethereum has reached over $1 trillion in 2020. This is more than PayPal, and all of this is not only limited to cryptocurrencies that, as we know, can be quite volatile in nature. Stable coins that track the value of flat currencies, such as the US dollar, also experienced tremendous growth in the DeFi ecosystem. The market cap of USDC, a popular stablecoin in DeFi, went from less than $1 billion in April 2020 to over $6 billion in 2021. Another one, DAI, went from less than $100 million in April 2020 to almost $2 billion in 2021. Now, to understand the value proposition of decentralized finance even better, let's go through a few common problems in traditional finance and see how they can be addressed in DeFi. No more single authority decision making. Let's start with the recent situation in the stock market, the famous GameStop saga. After discovering that GameStop stock, GME, was overly shorted by some of the hedge funds, users of a popular Reddit group, Wall Street Bets, started buying GME, as they believed this could initiate a short squeeze that would result in hedge funds having to buy back the shortest stock, driving the price higher. At some point, Robinhood and a few other stockbrokers came up with a controversial decision to disable the possibility of selling GME and a few other stocks. A situation like this just wouldn't be possible on a decentralized exchange like Uniswap. There is no one who can disable or alter the trading capabilities of the platform. There is no single authority making decisions on behalf of the users. DeFi democratizes access to trading. This situation exposes another problem: decisions made behind closed doors. A group of people deciding to shut out trading, or maybe a bunch of bankers deciding what the best interest rate is for millions of people. In DeFi, interest rates are adjusted automatically based on the supply, demand, and risk parameters of certain assets that are configured by the protocol. Even if some DeFi lending platforms allows for changing certain risk parameters, all decisions are publicly visible and changes are voted on by multiple people who govern the protocol. And of course, this would dramatically reduce cost. What about this problem of paying 10% to 30% of the value of a bank transfer just to send money across the globe? In DeFi, you can send USD-based stable coins for a fraction of that cost. Even better, they will arrive in a matter of seconds. With the settlement of different assets measured in seconds instead of days, the counterparty risk is dramatically reduced. Accounting every record is publicly available on the blockchain, so accounting becomes super easy and can be most likely completely automated. This can dramatically reduce the human capital needed. Equal access to financial services, a defect protocol doesn't care who you are. It just follows predefined rules that are exactly the same for everybody. Security is one of the problems with decentralized financing. Although DeFi presents us with a unique value proposition, it comes with its own challenges. It brings more responsibility to the users, who are now truly owning their assets. So they have to make sure they store them in a secure way. There is not a lot of hand-holding here, especially when interacting with new DeFi protocols. There are still certain regulatory risks, although things like KYC and AML cannot be enforced in the DeFi protocols themselves. The regulator may try to force wallet providers or best teams responsible for certain protocols to add KYC requirements to their user interfaces. Scaling is another issue that has to be tackled. The popularity of DEFI resulted in a tremendous demand for the block space on Ethereum. This in turn results in high fees for the user. It's not uncommon to hear about $10 or even $50 Uniswap transaction costs. Scaling is already being tackled by ETH2 and Layer 2 scaling solutions. Hacks are another challenge of the DEFI space that makes using certain protocols, especially the new ones, risky. Various DEFI protocols are also exploring different governance models. However, voters' apathy is one of the common problems here. Uncollateralized loans and mortgages are big areas of traditional finance that are slightly harder to implement in DEFI. Fortunately enough, there are already protocols like AAVE exploring different possibilities such as credit delegation and tokenized mortgages. Despite the challenges, DEFI is a unique innovation, a 0-to-1 innovation, and I believe that sorting out some of these challenges is just a matter of time. So, what will happen to traditional finance if DEFI keeps innovating and growing at this tremendous pace? Personally, I think that traditional finance will have to adapt quickly. Otherwise, they are taking a risk of slowly becoming irrelevant. Like with all other big technological changes, this often happens gradually, then suddenly. We'll probably very quickly see some of the incumbents trying to tap into the possibilities of DEFI. For example, by leveraging liquidity or accessing more favorable interest rates in one of the DEFI protocols. This will most likely start with fintech companies that are already involved in crypto, but I wouldn't be surprised to see banks using DEFI in a few years' time. There are also a lot of areas of traditional finance that can significantly benefit from moving into DEFI in the future. As an example, instead of going public on the stock market, companies could issue security tokens and take advantage of globally accessible liquidity. On top of this, people investing in these tokens could let them out and make an extra yield on their investment or use them as collateral for taking a loan. It's also very likely that DEFI will become a new backbone of the financial system. With simple user interfaces, most people will probably not even know they're using it, in similarity to how they don't know what's happening under the hood of their traditional trading application. At this point, DEFI will just make banking and finance more efficient, fair, and open. So what do you think about the future of banking? How big will DEFI become? Comment down below. And that wraps up the video. Thanks for watching.